Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2025, and we're diving into the third quarter earnings report of Zions Bancorporation. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Zions Bancorporation, a leading financial services company, has just released its Q3 2025 earnings report, and there's a lot to unpack. Let's get started.
Revenue and profitability overview. Let's start with the top line. Zions Bancorporation reported net earnings of $221 million for the third quarter, with a diluted EPS of $1.48. How does this compare to previous quarters, John?
Well, the net earnings have seen a slight decrease from the previous quarter's $243 million, but they are up from $204 million in the same quarter last year. The diluted EPS of 148 cents also surpasses the analysts' forecast of 146, which is a positive sign. The net interest income increased by 8% to $672 million, and the net interest margin improved to 3.28%, up from 3.03% last year, indicating better profitability.
Operational efficiencies and future outlook. Despite the earnings growth, operational efficiency is crucial. How did Zions perform in this area?
The adjusted pre-provision net revenue was $352 million, up 18% from last year, reflecting strong operational performance. The efficiency ratio improved to 59.6%, down from 62.5%, showing better cost management. Non-interest expenses rose by 5% to $527 million, but this was offset by a 7% annualized growth in customer deposits, excluding brokered deposits, which is a healthy sign for future growth.
Credit quality and risk management. Credit quality is always a concern for banks. How did Zions manage its credit risks this quarter?
Credit quality was a mixed bag this quarter. The provision for credit losses increased to $49 million, primarily due to two large commercial loans. Net charge-offs were $56 million, significantly higher than last year's $3 million, largely due to a $50 million charge-off related to two commercial borrowers. However, non-performing assets decreased to $324 million, and classified loans were $2.4 billion, showing some improvement in asset quality.
CEO commentary and strategic initiatives. What insights did the CEO, Harris H. Simmons, provide in the earnings release?
Harris H. Simmons expressed satisfaction with the core earnings growth of 14% and an 18% increase on an adjusted basis. He highlighted the 25 basis point improvement in net interest margin and the 17% growth in tangible book value per share. However, he also noted a 3% annualized contraction in loans, which is an area of concern. The company is taking legal action to recover amounts from guarantors of the charged-off loans, indicating proactive risk management.
EPS forecast and analyst expectations. Let's discuss the EPS forecast. Analysts had predicted an EPS of $1.46. How did Zions perform against this expectation?
Zions Bancorporation exceeded expectations with an actual EPS of $1.48, beating the forecast by 2 cents. This beat, based on a survey of 11 analysts, reflects the company's strong operational performance and effective cost management strategies.
Key takeaways. In summary, Zions Bancorporation delivered a solid performance in Q3 2025, with net earnings of $221 million and a diluted EPS of 148 cents, surpassing analyst expectations. The net interest margin improved to 3.28%, and customer deposits grew at a 7% annualized rate. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Zions' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Zions Bancorporation's performance in the comments below.